I can't lose.
Uh-huh. So normally a stock price reflects a company's value, right?
Okay.
And 2 weeks ago, GameStop was valued at $17 a share, and then it went to $413 a share. Would you say that reflects the kind of business GameStop stores have been doing in the past 2 weeks?
We sell games?
Right, but are you good at it?
Not really. People download other games now, so we're kind of like, I don't know, what do you call it?
A dying business?
Yeah, that's it.
Retail traders are now apparently turning their attention to silver, the precious metal, shooting up this morning, notching its highest level in about 8 years. Joining us now to talk about this in the broader market of all this retail activity is Allianz and Gramercy advisor Mohammed Erian. He's also the president of Queen's College, Cambridge. Mohammed, last week we had a couple of days, volatile days, where we lost 600 plus points. We had a rebound in between. We have a rebound today. Are you troubled by the speculation that this is a symptom of, perhaps, or is it the actual what's actually happening that troubles you about the underpinnings of the market?
So I'm fascinated by the new technicals, Joe, and thank you for having me. And that is that retail investors can have such an influence. You mentioned silver today. Silver is moving on the notion, and I want to stress it's the notion because it's being opposed by certain retail investors on Reddit, is moving on the notion that that's going to be the next target. But it's a very different target. But the fact that you can move silver, such a large market, is an indication to everybody that they have to take this new technicals seriously.
All right. So what are you saying exactly? Spell it out for me. So if you're on Reddit and you get enough people interested, you can cause them to bid up the price of silver. Is this going to theoretically end at some point? Will GameStop, and when the music stops and there's no chairs left for people to sit, are you expecting that stock to return to where it was, for example? And how's that going to look? And what does that say?
Okay, so two issues. The fact that you can get people to look at silver, and in the process they look less at GameStop. And because of that, there's less worry that the hedge funds who are short GameStop are going to sell, means you can impact lots of markets. So don't underestimate in the short term the influence. As to what will happen, look, there's a major battle going on between three actors, not two, three. The hedge funds that are short GameStop, the retail investors that are long, and the people in the middle. And the question as to where it goes next is who's got the weakest hand? Who's going to fold first? Who's not going to be able to stay in that trade? Now, historically, that has been the retail investor, historically. But the retail investors are more organized right now. So if they can stay organized, and that's why the silver issue is a really interesting wrinkle. If they can stay organized, they can actually force the hedge funds to cover more. But today, you get a notion that maybe they cannot stay organized. So we're going to see. The one thing that is systemically worrisome is if the intermediary folds. That is a completely different issue than if the two sides of the trade fold.
But you don't just ascribe what we're seeing with these shorted stocks into the same area as the hot IPOs, the SPACs, the Fed-induced irrational exuberance, if you will. Is it all part of the same thing? And are we in the late innings of this cycle?
It is certainly part of the same thing. When you take the cost of leverage to zero, and when you make liquidity abundant and predictable, which is what central banks have done, you encourage people to take on a lot of risk. You encourage people to take on a lot of leverage. You encourage people to take on a lot of debt. And we've seen all three happen. And this is yet another illustration of that phenomenon. So yeah, it is part of the whole thing. Are we in the late innings? I remember I've always told you one of four things is going to determine that. Central banks doing a U-turn on policy, they're not going to do that. Massive bankruptcies, unlikely in the short term. Market accident, perhaps. We came close to a market accident last week. Inflation fears. So keep the eye on the last two things. That is what tells you whether we're in the late innings or not. Otherwise, this can continue for a while. But we got close to a market accident last week.
Mohammed, let's, just for argument's sake, say someday that the shorts are all gone in GameStop. Where would you expect the stock would be at that point? Who would be the main owners of that stock? And what finally happens at that point? Is it like Wile E. Coyote or the Roadrunner? He looks down and, when he's out of, and has gone all off the edge of the cliff and looks down, there's nothing beneath him? Or does it stay there? I don't know how it ends.
So technical short-term, fundamental long-term. So if your scenario plays out, whereas the shorts are forced to cover, they scramble, the price will go higher. However, that price is completely disconnected from the fundamentals. So the inclination of the longs to get out at that point is going to be very high. And that is a small volumes in terms of what can be sustained. So what you would get is the thing shoots up as shorts cover, and then it comes back down quickly as longs realize that they've succeeded. The hypothesis has played out. The strategy has succeeded. Now get out. So yeah, it will end up lower than here. But if the hedge funds are forced to cover, it's going to go a lot higher first.
All right, Mohammed. I don't know what a lot. It's pretty high already. We'll see. Think about it. 500, 600, who knows? Anyway, thank you. We'll see you around, Mohammed. We'll see you again soon. Thanks.